So, hi guys, Sunday evening. Welcome to a Rent to Success session. My name's Arsh Ellahi, and I'm your host for the evening. I'm covered by two colleagues by the name of Craig Webb. Craig, you there?
Yes, hi guys. Glad to be
Good evening.
here.
And then here with Ben Bayliss as well. Hi Ben, how are you?
Hello, everyone. Hope you're all well.
Right, okay. So let's get moving on. We've got a lot of content. We aim to be on for no longer than 60 minutes. And in there, what we're going to be covering is pretty much what is rent to rent, how it works, and the money that it can generate, and the case studies. We're going to be showing you some real case studies of what rent to success looks like and how other people have done this within your location and how it can happen all over the country. So let's just give you a brief introduction as to who we are and why we're here. So my name's Arsh Ellahi. So I've been investing in property for a lot of you probably will have known of me because I've been investing in property for over 24 years. I've built a portfolio, properties that I own, of over 1,000 plus tenants. So I've got quite a large portfolio. And in my time, I've taken on over 50 rent to rent properties. So I've come across quite a few different scenarios where we've got rent to rent scenarios, and I've got over 100 service accommodation units across the UK. So that includes Cornwall, Wolverhampton, Birmingham, Liverpool, Manchester, Nottingham, and Blackpool. We're soon to be adding Kidderminster into that. So we're going to be taking on a portfolio of properties in Kidderminster. So I'll be giving you some live case studies of what that looks like. I've been writing in property magazines for nearly 9 years. So I've been writing YPN magazine, HMO magazine. I'm a feature columnist, which I write in every month. And in lockdown, do you remember what lockdown looked like? I released a podcast called the Property Rebel Podcast. We release a new episode every Tuesday at 6 a.m. So go and check it out. Finally, I'm the owner of the UK's first property investment platform marketplace called the Property Investor app, which is a mobile application which you can go and download from the App Store, whether it be Google Play or App Store, under the handle of Property Investor. We source all kinds of deals like below market value deals, rent to rent deals, lease option deals. We've got them all there. Two ways to get involved. You can either go to the website, which is propertyinvestораpp.co.uk, or if you've got a smartphone, go to the App Store, type in Property Investor and download it from there. Now I'm going to pass you over to our host for the evening, who is Craig. Craig, tell us a little bit
Yes,
about yourself.
hi guys. For those of you that don't know me, my name is Craig Webb. I'm based in Warsaw, and I've been working with property now for around 7 years. I started doing rent to rents. I built up a successful rent to rent portfolio. Um, I've also helped train and guide many other property entrepreneurs get started in their rent to rent journey and in deal sourcing. Um, I really enjoy deal sourcing, so I'm a deal sourcer as well, specialising in rent to rent HMOs, rent to rent SAs, BRRRs, and below market value deals. And this year alone, I've personally sourced over 27 deals in the last 12 months. Um, we also work, obviously, we work with other deal sources, so we do a bit of co-sourcing. And yeah, that's a little bit about me. And then over to you, Ben, if you want to introduce yourself.
Hi there. Yeah, thanks very much, Craig, for that fantastic introduction. So I'm Ben Bayliss, based in Birmingham, and I've been full-time in property now for the last 10 years. And throughout that time, I started off building up a property portfolio using the rent-to-rent strategy, which is what we're here to learn about tonight. So yeah, we've built up a portfolio of HMOs as well as service accommodation properties using the rent to rent model. And from then, things have progressed and we've started doing BRR, so buy, refurbish, refinance strategy, as well as lease options and a few other different methods, buying below market value, etc. So right now, I've got over 100 HMO tenants in and around Birmingham. So it's like Birmingham, Coventry, Wolverhampton, and Warsaw, actually, most recently as well. So over the last 12 months, I've sourced and secured 24 deals. So that's around two a month. And that's not including the ones, obviously, that we've done as co-sourcers with Craig or anything else. So that's a little bit about me. And then we're just going to quickly go on now and talk about what is rent to rent. So quite simply, rent to rent is where we're taking a property from a landlord or from an agent, and then we're renting it out to a third party. Now that could either be as a HMO, so you take the full property off the landlord and then you rent out the rooms individually, or it could be as a serviced apartment, so where you take on the property, you rent it out on a nightly, a weekly, or a monthly basis. You pay all the bills, you pay the landlord a fixed rate, and you rent it out for a higher price. And the bit in between those two prices, that is your profit. So, of course, the aim of the game is to charge a higher price than what you're paying to the landlord originally.
Okay, so one thing I'm going to say is that rent to rent or rent to SA, depending on what you want to call it, it's not a new business model. And the reason why I say that is that we're not here to reinvent the wheel, but what we are going to show you is that if you do it correctly, how it can work for you very successfully and how you can actually make a very good business out of it. Now, the reason why I think that all three of us like rent to rent is because you don't have to buy property from the outset. Now, whether you're currently starting out in property or whether you've already in property, what I like about rent to rent is that, first of all, it limits the amount of capital that you require to get involved. But even if you have got capital, this strategy allows you to scale up quite quickly. Now, because you don't require huge deposits, you don't need a mortgage to get started. So there's a few myths about, is this legal? Is it not legal? But believe it or not, it very much is legal because everything that we do has been confirmed by solicitors. So you don't need huge deposits and you don't need a mortgage to get started. So whether you're creditworthy or not, rent to rent works for you. And the whole process of it means that we're working on controlling assets rather than owning them and creating wildly profitable businesses. Now, I'm going to put this out there because it's apt for what we're talking about today. Because when you think about some of the largest businesses in the world right now, they very much work on the basis of control rather than ownership. Whereas previously, we've always been told that to get involved in property, we've got to buy a property, we've then got to get a mortgage, we've then got to go off and then service that debt. But here, if you think about some of the largest businesses in the world, when we talk about Uber, they're the world's largest taxi firm that own 0 cars. Facebook is the world's first popular media company that creates no content. It's reliant on the users to create the content. And Airbnb, which we're probably all very familiar with, the world's largest accommodation provider, owns 0 property. And they all work on the premise that it's control rather than ownership. And what we're going to be doing today is actually showing you how this can work in any city all over the UK. So I'm going to pass you back over to Craig, I think.
Craig, yes, yeah. Okay, yes. So as rent to renters, we are problem solvers. So we're helping the landlords with their problems, and by doing so, we're making a profit for ourselves. So, for example, a landlord struggling to rent out his or her property, we provide a solution to that by offering them a guaranteed rent for a fixed period, which is normally between 3 and 5 years. And so the landlord gets paid whether the property is occupied or not, with no void periods. So we basically find a problem and we find a solution to that problem. And that's a simplified version of how it works. Yes, and obviously, as the owner, so we're renting from the owner as a rent-to-renter, it's got to benefit the owner as well as us as well. So obviously, we're offering them a great deal. We're offering them that they don't have to find tenants anymore. They don't need to set up tenancies. They've got and some of these letting agents, that a lot of landlords that are new to HMOs, they deal with letting agents that aren't used to dealing with HMO properties, which again gives the landlords a headache. They don't have to deal with those people anymore because they deal with us directly, and we specialise in those properties. There's no concerns about the legal obligations for the tenant because we deal with that. They haven't got, as I mentioned earlier, there's no void periods. They get their rent guaranteed. They don't have to worry about call outs if there's any problems in the property, and they don't need to worry about the repairs because we cover all of this as the rent-to-renter. And as an owner, this is a very, very attractive offer. So we're not just asking them, can we rent your property and make a profit? We're offering them a brilliant service.
So for those that are on the webinar right now, if you're a property owner and someone came to you and they actually stacked out all the benefits of what rent to rent can offer, would you not take them up on this? Because if you're not having to manage it, you're not having to deal with tenants, you're not having to deal with maintenance. I don't know about if any of you had any call outs this weekend at Easter Bank Holiday. I know that I have. I had an issue today that I had to deal with, but if I gave it out to a company, I wouldn't have to worry about that. So this is also more so about making your portfolio passive. So these are the benefits that provide to the owner. And the reason why we state that there is because, as Craig very clearly said, it's got to be a win-win for all parties. It's got to make sure that the owner, there's a win for the owner. So a lot of this, it comes down to time management, a lot of, and more so time freedom. And that's one of the big key things that owners want, because lots of people buy property, but not many people actually like managing property. So by giving it out to someone that can run it on a rent to rent model, it really seems attractive, where they're pretty much become a hands off and a hands free investor. So back over to Craig, what's the benefits to the actual person taking on the property? Why would they do that?
Yes, so for us as a rent-to-renter, what's in it for us? Firstly, you don't need much money. It's very low capital to get started. So you don't need to worry about trying to raise a deposit to get a mortgage. You don't need to use solicitors, as we use less management agreements. And these transactions can be done really, really quickly. You can literally get it done the same day, and the keys can be handed over that day for the property. And the terms are negotiable, so you can have it on a 2-year, a 3-year, or a 5-year, whatever's suited to both you and for the landlord. As we say, it's win-win both ways. You can negotiate break clauses, which gives you security as well. And it's a brilliant way to build cash flow. Even if you're already investing in properties, it's a great sideline to have on your portfolio to bring in real quick cash flow. And it's scalable. You can take on one property, you can take on 10 properties, because it doesn't take much time, it doesn't take much money, and you can scale it really, really quickly. And, you know, for an investor, for someone like me, this is another very attractive offer. So this is how it works both ways. Both people win, the landlord and the investor.
Okay, so for the guys that are on the webinar right now, you're obviously here to listen and learn about rent to rent. So from your point of view, what are the benefits that you believe you can offer to the investor? Because I'll tell you, because when you're taking on a property, if you're not having to buy it with a mortgage, you're not having to get a 25% deposit, that's a big key selling point. Because let's just work on the basis that if the house was worth, I don't know, let's say £100,000, the average acquisition cost is circa around £30,000, which is 25% deposit, which is £25,000. Then you've got your stamp duty, then you get legal fees, then you've got mortgage arrangement fees. So on average, that will come up to £30,000. Now, quite a few may not have that money, but what you can do is you can leverage what you've got, your time, and you can come back and you can say, guys, okay, this is what we can do. This is what we can offer. So we can offer you a guaranteed rent. We can offer you a long-term commitment. We can offer you the fact that you don't literally need to do anything. So you're going to leave us the property and we can run with that property. Now, it's obviously down to us as investors to utilize our skill to get that property generating income. I'm going to give you a few examples shortly of how we've done this in multiple cities across the UK. Now, what I like about it, yes, I've already got a portfolio of 1,100 tenants, but what I really like about this is the speed, because if you're buying a property, generally speaking, we all know that that can take months. But where here you could go to and you can find a landlord within minutes. Believe it or not, you can actually find a landlord within minutes. You can be on the phone to them and you can have everything agreed within that same day. And you can be having the keys in your hand within that same day. And the agreements are all legally binding documents. And it really works on the basis that the landlord wins, you win, and you've now got a property and you add that onto your portfolio. So does this seem attractive to you as a property investor? I'd like to think everyone's going to say yes, because if I was to say, guys, I'll give you a quick example that there's a landlady, I've not even put this in the slides. There's a landlady based over in actually New York, and she had a property that she'd previously let out to a housing association, and they absolutely trashed the property. So she didn't want to sell it because she wanted it as a pension pot. So we took the property off her on a 7-year agreement based on the fact that there was going to be some conversion works done to it, which she had to pay because it was quite a large amount. But we've now got a block of 10 apartments in Manchester, which are cash flowing over £8,000 a month. And we didn't have to put a single penny into that deal. I'm not saying that all deals are going to go like that, but if you do it correctly, it really does. So next, how to profit from rent to rent. I'm going to pass you back over to Craig because this is one of his deals.
Yeah, this is actually my favorite strategy, is the HMO model. So you can rent a property out as a single let family property, or you could rent it out as a HMO property. And doing it as a HMO, you're renting out the rooms on an individual basis rather than renting out the whole property, which obviously that way it's a lot more profitable. The average 4-bedroom family home rents out for around £1,000 a month. The same property you can get 5 bedrooms out of, because, for example, a 4-bedroom house with 2 reception rooms, you can use one of those reception rooms as another bedroom, rent the rooms out separately, £600 per room. You're going to be making somewhere around £3,000 per month. Now, obviously, there's bills, there's utilities to pay, and you've got to pay the landlord his or her rent. However, you're still left with a massive £1,500 per month average, which is around £18,000 a year, I believe. That's from one single property, which I absolutely love the HMO model. It's a great model. So the landlord gets their rent guaranteed. They get all the benefits that we've mentioned, and we get to profit £1,500 per month every month from one single property, which has cost us very little money to actually acquire this property. Yeah. Oh, yes. And this property, this is a great property, this one. This is one that we sourced in Coventry, and this is through a letting agent. And the great thing about working with agents is once you've delivered on your promise, you've done everything you said you were going to do, and you've not messed them around, you find these agents, they start to pass you more and more and more deals. So this particular property, it's a 5-bedroom HMO. I came across an agent over in Coventry, and he actually gave me a call, and he says, I'd sent him an email, and he says, I've got some properties you might be interested in. And this one, we agreed a 3-year term. It was a fully furnished, fully licensed, and all ensuite bathrooms. It was a really, really nice property, cash flowing £700 per month every month, which is around £8,400 per year. This particular property, we didn't have to do any work to it. It was literally sign the agreement, get the keys, start renting out the rooms. So over a 3-year period, that makes over £25,000 again from one property. And this particular agent, we've had around 20 deals off this one agent, just because we keep delivering on our promise. It works brilliantly. And like I say, the HMO, personally for me, I love the HMO model. It's my favourite model. Yeah, as you can see here, this is how we took the property on. It's literally ready to go. Yeah. And then the serviced accommodation model. I think Arsh was going to talk you through this model.
So when you take a property on, obviously you've got two different types of properties. You've either got houses and you've got apartments. Now, what I've been doing for the last, I'd say, last 5 years, and probably in excess of that actually, is finding owners who own blocks of apartments, and I've been taking them on a rent to service accommodation model, which is pretty much. And it's very easy to do because once someone's developed a block of apartments, if you can offer them a long-term hands-free solution, I find that developers are very easy and quick to work with. More importantly, because they are a developer, they're more commercially minded. Now, with service accommodation, you're not dealing with tenants. So I think one of the key benefits here, as opposed to not working with tenants, you're actually working with guests who are there on a night-by-night basis. So it works on like the Airbnb model. So the average, let's just give you an example. The average two-bedroom flat may rent for £1,000 a month on a single let basis. Or if you can put it on Airbnb as a very low nightly rate at £50 per night, that would generate an income of circa £1,500 a month. Now, but that all sounds great that you're increasing your income, but you need to factor in other costs such as utilities, booking fees, cleaners, and linen. Because obviously, every time a guest leaves, you've got to have the apartment cleaned, ready for the next guest, which means that you're going to have to do a changeover, which means that you're going to have to change the bedding and you're going to have to change the towels, ready for the next guest. So it does work. And I'm going to give you an example of a block of apartments in Nottingham that I've taken on. So I agreed a deal with the owner where I would initially take it on with a 3-year lease, but we then renew the lease for a further 3 years on the same terms, providing that both parties have confirmed that there have been no issues. So providing that there's been no late payments, there's been no damage to the property's been upkept and kept well. Now, I know that the building's going to be kept well because, let's face it, in order for me to attract people to come and stay there for a night or for a couple of nights or even a week, that property has to remain immaculate because, as you probably all are aware, when you're booking your holiday and you're looking for a hotel, you're predominantly buying that hotel based on the images that the that the hotel portrays, which means that you need to make sure that your property is always immaculate and the images are immaculate so that the guest comes and says, yes, we want to stay there. So the property is always going to remain immaculate. And on top of that, we've got cleaners that go in the apartments every day to make sure that they're maintained and they're well cleaned. So I took the property on a 3-year lease. No deposit was paid. And we agreed because I said that I wanted to spend the money on the property, not have it actually just sat in someone's bank account. We had a 3-month rent-free period because he was still finishing the property off, which allowed us to start advertising the property to get our bookings booked up well in advance. And they still continue to ensure and maintain the structure of the building. So when we talk about the structure, I look after anything internally, they look after anything externally. And that's what I do with pretty much all the rent-to-rents. So as you can see, the brand new apartments, we're right in the city centre of Nottingham. We're right next to the castle of Nottingham, so Sherwood Castle, and they let out pretty much. We're on Easter weekend, we're booked out. Every single apartment all weekend has been phenomenal. So I've worked on, based on my calculations for the Nottingham apartments, of £130 per night, which is lower than the competitors. So even at that, at break even, taking into consideration our break even point, when we talk about break even point, for those that don't know, I try and calculate how many nights do I need to be booked up for to break even and cover all bases and all costs. So we look at things like the cleaners, we look at the booking fees, we look at the rent to the landlord, and what is our break even? How many nights do we need to accommodate guests for just to break even? And so we worked on the basis here at 50%, and that was taken into consideration management fees, high fees, and also contingency costs. So I've given myself a contingency. Even then, it still generates £2,000 a month, and that's £130 a night. Now, in a lot of the apartments are achieving circa 150, 170 to £200 a night. So if we increase the rates, the break even actually starts to get lower because that profit started to get higher. Hopefully that makes sense. If you haven't got any questions throughout this process, put them in the Q&A box, please, and we'll go through these as we go through the session. So moving on to a different city, here's another SA models. SA stands for service accommodation. So as a single let, the apartment would achieve circa £950 a month. Now, as a two-bedroom apartment, we set it as a minimum 3-night let at £150 per night. And the occupancy rate for this apartment was circa around 82%. And based on that, it was generating in excess of £3,000 per month. Bearing in mind that the single rate that the rent that we've agreed with the landlord is circa £900. And if it's generating over £3,000, you can see that there's a decent cash flow. Even if you factor in all the other costs, we're left with in excess of £1,500 from one apartment alone. Now, here's another one. We're going to go to Birmingham. Single rate let, it's very similar. Again, because this is a two-bedroom apartment, let as a minimum of 3 nights. The reason why we do 3 nights is because it reduces the amount that we spend on cleaning. It reduces the level of turnover. Whereas if you got it on 1 night stays, you're going to have to put, predominantly if you're fully booked, you're going to have to do 30 cleans and 30 changeovers. You're going to have to deal with 30 guests, 30 lots of reviews. Whereas here, we've done it as a minimum 3-night let, which means that if we're fully occupied, really, we only have to deal with 10 changeovers, which means that we don't need as much linen, we don't need as much cleaning, and it makes the operation so much smoother. And here, we actually let it on a corporate let, agreed for 4 months, based on £150 per night occupancy. And because it's let for 4 months, we've got a 100% occupancy rate. And the occupancy, the amount that we charge is £4,562 for the month. Now, if we're only paying the landlord £950, when we say only, he's still getting what he was agreed, £950 per month. Even after all cleaning costs and any fees, we're still left with the best part of £2,500 for this one property. £2,500 is equivalent to £30,000 per year. So that's one property making the average salary for one person in the UK. Now, I'm going to pass you back over to Ben in a second, but everything that we've talked about there is all about control. Now, it's rather than ownership because, as I said, buying a property is expensive. Buying property is rather expensive. So you need a 25% deposit, you need service, you need legal fees, you need stamp duty. These are all costs. And if you don't have the funds, and remember, no one's a bottomless pit of cash. So how many properties are you going to be able to buy before you run out of cash? Whereas with rent to rent, if you're quite savvy with your negotiations, if you don't pay rent up front or you don't pay deposit up front, how many can you take on? You might need to service them, you may need to spruce them up, but within £30,000, technically speaking, you could very easily take on, even if you had to spend £5,000 per property, you could take on 6 properties as opposed to 1 property in ownership. Now, the reason why I like this as well, because lots of people talk to me and they say, Arsh, but what's the risks? Because you're committed to a landlord. What happens if the property is not occupied? Now, I very clearly state and say that when you buy a property, your commitment is to the mortgage company. When we say the mortgage company, because you're taking out a mortgage for circa 20 to 25 years, and you're committed to buying that property, you're committed to servicing the debt of that property to the mortgage company. So every month, regardless of whether that property is occupied, you have to pay the mortgage. You have to pay the standing charges to electricity, the gas, you've got to pay the council tax. Now, there's just got to be a shift in your mindset to say, well, in actual fact, instead of my commitment now being to a mortgage company, it's now actually going to be to a landlord. And the reason why I say that is because instead of you paying the mortgage company, you're now paying a landlord. But the benefits are that you're not having to have this massive chunk of cash to pay up front. You can negotiate a lot of the terms with the owner. So you can negotiate things like rent-free periods. You can negotiate the amount of deposit you pay, or if you pay a deposit, the amount of rent that you pay. With a mortgage company, you have none of that negotiation, because they very simply say, here's our product, you either like it or you don't. You can't turn around to a mortgage company and say, guys, I can't afford your mortgage this month. Can you let me off this month? They'll probably defer it for a month, but then you're just increasing your payments further down the line. With a landlord, they're a little bit more open to a negotiation because they want to create a win-win. With buying a property, the win-win with the mortgage companies, you do as we say, or you're not having the product. With the landlord, it's a case of, oh, okay, maybe, okay. We wanted 950, but we may accept 850 on the basis that it's a long term. You're going to look after the maintenance. We're going to have to do this. We're going to have to do that. And it's a bit of back and forth, but we move forward. So someone in the session has put, how do you monitor all these various locations remotely? Believe it or not, you actually can. So I manage all these locations. I'm based in Wolverhampton, and I manage the locations of Cornwall, Manchester, Liverpool, Nottingham, Milton Keynes, Birmingham, Wolverhampton, all from Wolverhampton. And believe it or not, I actually don't have to manage. So I've got virtual assistants that manage this as well. So we'll be talking about how you can incorporate that into your business, so that, believe it or not, you can actually become hands-off and you can work on going off and generating more deals to bring into your business. So I'm now going to pass you back over to Ben. Ben's going to tell you a little bit about this, and then off that, we're going to have a Q&A session. If you've got any questions, feel free to reach out to us, and then let's see what we can do, and I'll answer any questions that we can.
Right, guys, I'm sure you can appreciate there's an absolute boatload of information here on rent to rent to cram into this webinar, which we've only got, around an hour to do. And that being said, we're putting on a fantastic 2-day event live in Wolverhampton, and that's going to be happening on Saturday the 20th and Sunday the 21st of April 2024 in Wolverhampton. There will be a Zoom link for people who want to stream it instead of coming along. But we do urge everybody to come along and join in for this live day. We've crammed it full of all the information you're going to need to set up your rent-to-rent business and scale it to wherever you want to scale it to. Now, you've got the booking link here. We're going to post that in the chat. People who want to book on. The price for this is going to be £995 per person, which is fantastic value considering everything you're going to be getting in the course, which I'm going to go through right now. So we're going to show you what you need with all your systems. So we've got proven systems for you to be able to set up your business. We've got your contracts. We've got your deal analyzers and deal stackers. We've got your scripts for talking to agents and landlords. We've got your positive forward cash flow with no bad debt. We're going to show you all the operational processes and templates for you to be able to get your business up, set up and going straight away. We've done it all before. I'm going to give it all for you to set it up on the day for you to get going straight away. We've got different techniques that we use to do our acquisitions, both online and offline. And we're going to tell you all about those. We're going to be doing live calls to agents, booking viewings. We're going to be showing you how to handle all the objections that landlords or agents might give to you. We're going to show you how to research, stack up deals, and we're going to talk about the legislation, because there's a lot of red tape, obligations, and the responsibilities as a business owner as well. And after that, we've got the support as well. So we've got an online Facebook community, which you're going to be part of. You've got me and Craig, who are going to be absolutely on hand to give you aftercare and support. And we're going to help you get your first deal over the line. We're going to teach you everything you need to know, how to source, secure, set up and scale your rent-to-rent business on this 2-day action-packed course in Wolverhampton. I'll go over the dates again. It's Saturday the 20th and Sunday the 21st of April 2024, and it's going to be a live session in Wolverhampton. Cost of the session is £995 per person, and once again, the link to book on is going to be in the comments. I think that should be in the comments now. And I look forward to seeing you all there. I look forward to helping everyone start and scale their rent-to-rent business, and it's something we're really excited about.
Okay, so there's been a few questions that have come in, and probably this first one's for you, Ben. Ahmed has said, if someone has limited capital, just to start off with one property to do Airbnb, how do they go off and get a property from an agent or landlord? So what are you offering them that the landlords are snapping your hand off?
Well, the thing is with rent-to-rent, we've got the sourcing side and the operating side. So was the question, if somebody's got a low deposit, can they still get into rent-to-rent?
Yeah, if they've got limited capital.
If you've got limited capital, we would always advise sourcing and selling a couple of deals to get yourself going and get your pot of money up to where you can actually set up your own rent to rent. And that's something we're going to go through in detail on the 2 day course. So you can get hold of a property, take control of it, and then source it to another operator, and they will run it as a rent to rent. And we just charge them a sourcing fee, which we could then take and invest into our own property at a later date.
So I suppose that's a very valid point that Ben's just made there, because every deal, even if you found a deal, you don't necessarily have to take the deal on yourself. You can actually just source that onto someone else, and you'll probably seen on the Property Investor app, we get lots of properties on there that have come as rent to service accommodation deals. And what this does, or rent to HMO deals, this means that someone's probably sourced the deal, they've actually negotiated the deal, but they can't take it up themselves for whatever reason, maybe out of area or they may not have the funds to do it. And they're just selling that deal on and they want to generate a fee, which then takes me on to Craig. So you've done a few of these, haven't you, Craig?
Yes, I have. Yes, and like I say, I love sourcing and selling deals, especially whilst working with agents. The great thing about selling the deals, when landlords and agents pass you deals and you can get those deals gone, give the agent and landlord the great service. They pass you more deals and you're making money. So you get the pick of the deal, so you get to keep the best ones for yourself, and you also get to sell on the ones that might be out of your area or it might not quite meet your requirements. And you can sell these deals, and we can even help you to sell these deals. I've sold loads of deals through the Property Investors app. There's literally investors lined up waiting to take these deals on. It's just a case of getting out there, picking up the phone, talking to agents, talking to landlords, which again, we're going to show you exactly how to do this on the 2 day course. And selling deals is a real good way to start building up that cash pot if you're starting with low funds.
Okay, so another question that's coming from Pearl, and she says, how does one decide the best areas to start a rent-to-rent business, in terms of rates? So, Ben, Craig, who's the best for you to answer that?
Well, in terms of rent-to-rent HMOs, it's something testing your what we call a gold mine area. So we always like to check our areas. We go through several areas and we show you exactly how to check the demand in that area. What obviously what kind of profits you can make from the property, and is there actually a demand? Because it's very important not just to know how to find potential properties. You need to know, is it in an area where it's actually going to make good money? And this is where a lot of people, when not trained properly, start to make mistakes. So pretty similar with the SA, isn't it, Ben?
Yeah, 100%. We again will go through this in detail on the 2 day course, but we look at the areas and we do deep dive research into those areas, find out the nightly rates, find out the rent to the landlord, find out your rough bill costs, and we make sure the deals work before we take them on.
Okay, fine. So yeah, I mean that all sounds good. So I mean, the anonymous person said, how do we monitor all these in various locations? So I'll just give you a quick rundown as that. So we use what is called a channel manager. So for service accommodation, we use a channel manager. I believe it or not, I actually use Uplisting. And then off the back of that, we then have all of our listings there. And I also use virtual assistants. So these may be people that are based in Spain, they may be based in India, they may be based in the Philippines. And then they actually liaise with all the guests. They deal with all the cleaning team. So you can systemize the business. So not only are you taking a property on from a landlord, you're then setting the business up, and then you've got virtual assistants that will run the business for you. So you don't have to physically be on site. As you can appreciate, I've got properties nationwide and I can't be in all those locations. And so off the back of that, I have people that can do this for me remotely. So another question that's come in, it says, in your opinion, what's the minimum investment to start the rent-to-rent service accommodation business? So, Craig, do you want to answer that one?
Yeah, no problem. To take on a property, I would say the maximum investment is around 3 to 4K. But it depends on what you negotiate, because if you can get a good rent-free period and you can get a no deposit, obviously that's money that you're not going to be paying out. So a lot of it's down to the negotiating the terms for yourself. And obviously, if you're going to be sourcing deals, it doesn't cost you anything at all. You literally find a deal, sell the deal. But in terms of taking on a property, with the rent to rent SA and rent to rent HMO, we normally say to budget around 2 to 4K. But it all depends what kind of property you negotiate. Like with the Coventry deal that we showed you earlier, that needed no money spending on it whatsoever. It was literally ready to start taking new tenants in and start making money. And if you get yourself a rent-free period, you can already start taking money from tenants before you've even got to start paying the rent, if that makes sense.
Okay, so another question that's coming from Jane. She says, hi, I'm based in Kent and heard that the deal is hard to stack up for rent to the landlord, as the rent to the landlord is quite high. What's your view? Thank you. Okay, so first thing I'm going to answer to that, Jane, is that remember, the rent to landlord is what he's after. What you negotiate is down to how good your negotiation skills are. Because, a landlord can ask for £5,000 a month, but if that property is sat empty for 3 months, believe it or not, they've just lost £15,000. So there's a different way of looking at it, and there's a different way of modeling the questions in order to ensure that the landlord understands what you're doing. Yes, there'll be some locations where the rent is quite high, and you may need to look at a different strategy. Instead of it running as a HMO, you may then not need to start looking at, does it actually stack up as a service accommodation deal? And remember, HMOs do actually still run a service accommodation as well. So you need to think, what is the best way for this? But I never get worried when someone says the rent is too high in a location, because if the property is empty, it means that the owner has got motivation to do a deal, because no one wants an empty property. They would rather have someone in it paying the income, because we'd like to think that that landlord's going to have a mortgage on it, is going to have outgoings on it. So whilst it's empty, he's going to be paying council tax. Whilst it's empty, they're going to be paying the standing charges for the electricity, the gas, and as well as the mortgage. So they have got outgoings. And if this is their only property, it could cost them quite heavily, or it's reducing the cash flow from other properties that they own. Does that make sense? Craig, have you got anything, or Ben, you got anything else to add to that?
No, it's a perfect point. We took one on actually in January, and the property was actually empty from August. It was an ex-student property. We viewed it in August. We offered a really good offer, what we thought, to the landlord. He denied it, and he let it sit empty from August all the way to January because he was trying to get that higher rent. And in the end, he negotiated back with us, and we ended up taking on the property in January and taking that liability off his hands. And in that time, he was paying the council tax, he was paying the utilities and the bills on the property. So he was keen, by January to get rid of it. And that's just another part of the negotiations that we can use in our favour to take on these properties.
Okay, and then another question that's coming says, what's the best way to find agents that are more open to giving you properties for rent to SA?
I think when working with agents, it's basically a numbers game. You need to be picking up the phone, calling the agents, and explaining to them the service that you provide and how you can help them. Where a lot of people struggle, they start picking up the phone and they almost feel like they're asking for a favor from the agents. And you need to remember that you're actually helping them. You're taking on this property, they're going to be getting guaranteed rent, and you're offering a brilliant service. And it really is a numbers game. You need to pick up the phone and call agents, move on to the next one, move on to the next one, and then you need to be chasing these agents back up within the next few weeks. And this is exactly how we've come. You know, we've made deals with loads of agents all over, literally just by ringing them, speaking to them, and telling them how we can help them.
Okay, yeah, no, that's very true. So I think we've kind of answered a lot of the questions there. Has anyone got any other questions? More importantly, can everyone see the link that we've got on screen? And also I've put it in the chat box. So if you've got any questions, feel free to ask, because we are coming to the end of the session. Remember what I said, guys, that we are running the session on the 20th and 21st, and it is going to be a full-on A to Z, everything that you need to know about rent to rent, rent to service accommodation, how you can either take these properties on yourself or how you can package them on and sell on to another investor. So you can say that deal sourcing and rent to rent and rent to SA kind of all merge into one, but we're going to be covering it so that you guys have got everything that you need to know so you can get moving forward. It is on the 20th and 21st of April. It is happening in Wolverhampton. The cost is £995 per person. We've put the link in the webinar chat. So I kind of just want to say, if there's any further questions, feel free to put them into the chat box or the Q&A box. If you've got any further questions and you want to email them over, send them over. You can send them to me. My team will pick them up in the morning. As well as that, if you want to have a quick chat with me, you can call the office and we can have a chat to see how we can get you moving forward from this. I think we've kind of closed it off for tonight, guys. So Craig, is there any lasting comments that you want to make?
Yeah, I just want to say thanks to everybody for joining. I've really enjoyed the session, and if anybody wants to contact me, you can find me on Facebook in the Rent Success group. Send me a message, message me directly, and I'll get straight back to you. And again, we can arrange to have a quick chat over the phone, again, to see how we can help you move forward and get started on your rent to rent journey.
Okay, brilliant. Ben, anything that you've got to say?
I'll just say thanks very much for coming on and joining in. And I really look forward to seeing you on the 20th and the 21st in Wolverhampton.
Brilliant. So on that note, guys, I wish you all to be safe, well, and happy. And I look forward to speaking to you all very soon. Thank you and bye-bye.
Thank you, boys. Bye. Bye-bye.
Bye.